Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we're going to talk about it. How do I deal with losing money in the stock market? You mean I can't win all the time? Let's talk about it. And welcome to Falsy Optics. Check. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. And as you can see, we're on the Stop Struggling Now YouTube channel page. So I want to thank you for being here, and please share the videos because we're helping other people, which turns into thousands, which turns into millions. So please try to help other people by sharing the videos. And you'll notice we have the join button over here on the right hand side. This is to become a member of the channel. Members of the channel get special messages under the community tab, and they get 1 or 2 videos per month directly for them. So I want to thank them, and I appreciate it so much for supporting the channel. Now, without further ado, how do we stop losing money in the stock market? It's like I can't win all the time. That's right, ladies and gentlemen. You cannot win all the time. It's called an investment. And with all investments, there are risks associated with them. Some are higher risk than others. And as I'm sure some of you have heard, high risk, high rewards. Well, that's kind of true in the stock market as well. So when somebody's trying to do the penny stocks versus an established stock, and a penny stock rises like 500% in a day, and then people say freak out, join the bandwagon, and all of a sudden it goes back down. Not everybody can win. So that's where we have to start with this video today. Because even I can't win all the time. Nobody can win all the time. Because nobody can predict tops and bottoms of the stock market. And in fact, over time, nobody can really predict month to month, week to week, year to year. But if you stay in it long enough, then most likely you'll come out ahead. You don't lose money until you sell. That is the beauty of the stock market. So we can have stocks that go down, but the only way you're going to lose is if you sell when it's below what you purchased it for. So I'm going to go over a few things today because a lot of people don't like to admit that they are losing in the stock market. But if everybody was winning, everybody would be a millionaire. But you have to lose sometimes. And I'm going to go over some losses. And what are we doing about it? So last year, that was when the Saudi Arabia and the Russians were manipulating the oil market, the price of oil stocks went down. And at the time, I was saying, hey, get the oil stocks, which is understandable, the Exxons, the MRO, Marathon, things like that. But that was another side benefit, was the oil tankers. They were flooded with oil. Nobody had a place to store oil. So then DHT, NAT were places you could go, because at the time NAT was giving a dividend of roughly 12, 13, 14%, somewhere in that neighborhood. It was up there. So every 3 months we're getting checks. Nice checks. All right? Because where else are you going to get 12, 13, 14% on your money at every year? So I talked about it, advised, said, hey, look at this Nat Stock. And I'm going to show you something, because this is the 1-year chart. So last year, when it was down around 270, maybe, because it was in March, I guess. So it was under $3. That's all I can remember at the time. So it was purchased at that time. And as you can see here on the bottom of the screen, it does say 12.5%. Still, but that's no longer the case, just so you know. But they're late. Google's late. They changed their dividend. So anyhow, I'll talk about that in a second. So anyhow, bought the stock $2.70, $2, $3, whatever. So then over the course of time, as you can see, it was looking good. It went up to 475, came back down to 354. So just like any other time, I would say, okay, I'm going to buy some more. So instead of my dollar cost averaging being like in the $2 and let's call it 75, I think somewhere around there. Now, when you buy around 380, $4, when you buy around this section, now your dollar cost average is moved over $3. All right. And then, of course, it went up here in April and everybody was loving life. We've doubled our money, but did we sell? No, I didn't sell. I'm still thinking 12.5 or 13 or 14% on my previous invested money. I'm still holding out. So over the course of time, it goes back down, $4, $4, drops back down to $3.93. And like what do we always say? Buy more when it goes down. So I'm true to the mix. I buy more. So again, I'm well over $3 at this point. $3 and probably 30-40 cents, and maybe even more, $3.75. I think I'm around $3.40 something is my dollar cost average. So now, because the price is at $3.20, I am negative. I'm still not going to sell though, and even though just recently they're cutting their dividend in half. So that means, that's why I said this 12.5% down here is no longer 12.5%. It's more like, because my dollar cost averaging is higher than $3.20, we're losing at the moment. But because I still get dividends, I haven't checked the offset. But the fact of the matter is, the stock is lower than what my dollar cost average is. So I just wanted to illustrate, I'm not selling though. So I'm just going to hold on to it over time, take my little now like 3 or 4% dividend money. I'm not going to invest any more money into it. I'm just going to let it ride, see where we go. But again, we can't win them all. You've heard me talk about this before. Now I'm going to go to CCiv, which came out, Churchill Capital. And everybody was talking about the Lucid merger. So we were able to get in pretty decently. 14, 15, 16, 17, whatever it was. No big deal. So when it rose up here to around 30, it was in the 30s. And it went up to 31. I think I told people on a Friday Night Live it went to 31. I bought more, even at 31. I had an advantage. The dollar cost average was just about $20, so it was no big deal even after I bought more. So then what happens? It moves up to like $40 last month. So when it went 40, I bought some more. Now what started happening is that started moving my dollar cost average way up to almost 30. So it ends up making it like 27, 28, somewhere like that. And then it keeps going. It goes up to 50 something. And then between the 39 and the 50 something, I bought some more at 40, 44, 45. That took me over the $30 mark, upwards to 32 or 33. So now I have not bought any more, but my dollar cost average is at like $33.95. Let's call it $34. So I have a negative on this at the moment. But again, the only way I'm going to lose the $3 or $4 per share is if I sell. So we're going to find out what's going to happen with Lucid over time, and it's an EV play, so I'm not going to sell anytime soon. But it could also go down, and then if it goes down to like 20 and 10 or something, which I doubt that would happen, but if it did, I'm still not going to sell. So I'm pretty much holding this for a long time because I think there's a long term. But again, I'm losing on this at the moment. The only way I definitely would lose is if I sold the stock. Here goes another one. Here's Vine. Invested early on when it was like $10 or $11. All right. So then it dropped down to 5, 6, $7. It was hovering around 6, $7. Bought some more. So then it just changed it over to around $9, $10, I think it is. And then what happens? It start rising again, 11, 12, 13. So we get up here, and when it got around, I think it was around 11, it must have been around early February, 11, 12, somewhere in this neighborhood, bought some more. So my dollar cost average went up, back up, and now it's in double figures. Meanwhile, the stock has went down after it hit its peak recently of 1268. Now it's back to 744. Meanwhile, I'm like $4 or $5 on the negative side. So again, this is another stock that I'm definitely behind. It's therapeutics, it's pharmaceuticals. I believe in the long term. So again, no sale means no loss yet. But if I did sell it, that would be a loss as well. So this is why we can't win all the time. Even though it appears that we possibly have lost. We haven't lost yet, ladies and gentlemen. And here goes another one, which was hot ticker item, NNDM. Last year, hold on, let me get the yearly up. Last year, it was cheap. $2, $3, $4, $5, whatever. And then all of a sudden, it started running up afterwards. So we were doing good. So of course, when it got up to around $10, it was time to pull some more triggers. But again, you go from around $3 a share, then all of a sudden now you got $4, $4.50 is your average price. And you're saying, okay, no worries, we can buy some more. Now you're moving it up to $6 or $7. I just want to show you, it goes up to 16, 14, 15, goes back down to 14, hovering around there for a little bit, 15. So I did buy some more when it was 13 something. So dollar cost average rose real fast at that point because I was around $4 or $5. Now all of a sudden it's like $9, $10. And once again, it's over $10 and like 95 or $11. I don't know. It's somewhere in that neighborhood, but we're in the red on this one as well for the time being. 3D play. Could this be a long-term run? I believe it will be, but right now my dollar cost average is above $10.26 because I invested when it rose above $10.26, obviously. So again, another L. So I just wanted to illustrate, you don't have to pay attention to your stocks every day, every week, every month. If you know why you invested in that the stock will perform according to your investment. But there is no reason, if you believe in the stock, to just abandon it, unless of course you're willing to take a loss. But this is exactly how the wealthy get wealthier, is that you are giving up potential wins a year from now, 3 years from now, 4 years from now, versus going, oh my God, I just lost like $4 per share. What's going on? I don't want to lose this money. Think about the other side of the coin. Think about all the other ones that you're actually winning on to offset this side of the coin. And then you would just stay calm, because if you already know what's going to happen over time, generally the stock market goes up. Hopefully you're in the sector that is going to rise. So that's all I wanted to discuss with this video today, ladies and gentlemen. Nothing special. I'm going to put an image on the screen just to, in case you missed previous videos, that just showed you how long does it take to break even after the stock market goes down. And we're talking about significantly down, 50%, 40%, 30%, 20% down. How long does it take? And you're going to see sometimes it's 3 months. Sometimes it's 3 years. Sometimes it's 1.5 years. Sometimes it's, the Great Depression was 13 years. But again, it could be shorter, because once it goes down, if you buy more at the bottom, once it starts coming back up, you could actually make up that difference before instead of just holding on to it for the length of the time. So in other words, I'll try to use a simple example. If we had $10, or well, a $10 stock, and then it dropped down to $5, then we waited 3 years for it to come back to $10, and we did nothing, it would take 3 years. However, if we would have bought more shares when it was around $6, for instance, now your dollar cost average is lower. I'll just use an example. $8 is in the middle. Now, how long did it take to get back to $8? Now that's where you'll be breaking even. Maybe it wouldn't have taken 3 years to get back to $8. It might have only took 1.5 years to get back to $8. And then when it gets up to $10, which if it took 3 years, now you're actually back in the, as soon as it hit past $8.01, you're back positive. So those are the things that you have to think about when you think about stocks. You just don't abandon them because of this everybody's spoiled, get rich quick type of mentality that's going on right now. This is not normal in the stock market. All right? So I just wanted to illustrate that with this video. And if you don't understand anything, you know you can always make comments down below. So I want to thank you for watching. Thank you for being here. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. That's why I had to go over this version of what can happen with your hard-earned money. This is the reason why a lot of people don't even invest in the stock market, because they're sitting there going, oh my God, that stock I bought for $10 a share is down to $4. I didn't see this coming. Well, sometimes you don't see it coming, and then sometimes you just can't panic. And that's what they call it, is panic selling. You don't want to do that. Just like when the EV market went down 50% this past 2 or 3 weeks. Just like when the artificial intelligence got hit the past 40, went down 30-40%. Just like the marijuana stocks went down 50% in a few days. People sold. So now they won't participate in the upside when it occurs. So that's the whole thing. You have to figure out, you're doing this for long term. You're not doing this to make 30, 40, 50% right now. All right? So with all that said, keep your head up, keep moving, and I'm out.